Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Bill Mitchell, and Bill is a certified public accountant who represents taxpayers in IRS collections, audits, and appeals, and also before the U.S. Tax Court. That's a little unusual for a CPA. We'll be maybe talking a little bit about that later, or at least in a separate interview. Anyway, he has offices in Santa Cruz and San Jose, California. He's also been licensed to practice before the United States Tax Court since 1978. He graduated from Santa Clara University in 1962, and after his service in the U.S. Army, he worked at the Internal Revenue Service from 1966 through 1971, when it was okay to work at the IRS.
Sounds
right?
like ancient history.
Yeah.
Yeah.
And anyway, and he's worked in public accounting from 1971 to the present. So today, I have asked Bill to provide some guidance about what to do if you're audited by the IRS. And we're covering highlights of a complex subject. This is something, I guess, our moral here is, in most cases, it's not a good idea to do this alone. And so please consult with a qualified tax advisor related to your situation. So, Bill, thanks again for joining me today.
Well, thank you for inviting me.
Okay. Okay. So somebody gets a letter from the IRS. Should they panic?
Mildly.
Uh-huh.
No, not. I would say that in recent times, it's not. You shouldn't panic, but probably the better way to look at it is that it's a serious matter right away, so that you shouldn't make little of it, and whatever response time is called for, that should be observed. And if you've self-prepared a return, you really should be cautious about trying to handle the matter on your own. It might be a good idea to just get a reference from a friend or someone who's got contacts with professionals to see if that might be the way to go to respond.
Okay, so in other words, it may be a good idea to seek good help. And one thing I'll let you know, folks, is that it's one thing to be preparing income tax returns. It's another thing to be dealing with the IRS. And so, so you're looking really for a different level, I think, of practitioner in many cases. Although in some cases, as we're going to be talking about, some of these things are just a matter of writing letters, and so it may not be such a big deal. It's more when you get into the office audits and the other things that things get a little more intense.
Well, I had a real horror story on a letter audit this year.
Okay.
Where a client self-prepared, and he was a bright fellow. He graduated from prestigious universities and he got his master's in an Ivy League university, and he self-prepared his return on an issue that I think you and I have discussed previously, where he had a stock option, and he sold that stock option on the same day, so all his income was reported as far as he was concerned, and it was. But there's an information return that's also required on Schedule D, where you show the reporting of it almost as a gain or no gain or loss transaction. He failed to do that, and then started a whole letter correspondence thing where he was actually by telephone doing collection due process things that he didn't realize he was doing, and it just got totally out of hand till the time when I was called in, where there were notices of intent to seize, and that's not a good time to be called in. But fortunately, it all came out well.
Yeah.
It wasn't an easy matter, and because of how far it had gone. So that's why I give some caution as to even letter correspondence these days.
Yeah, so if you're dealing with a stock, and by the way, I do quite a bit of work in the stock option area, so quite often I get clients initially from people that get these letters from the IRS, and let's just say they didn't really, if you work with some of the tax return preparation software like TurboTax, it will sort of lead you through this process if you let it. But if you shortcut it and try to do it yourself. In other words, basically try to use the software as a way of typing information in on forms without following it, then it won't fill in that information, and then you're going to get a notice like this. I've even had cases where people double reported the income. So they did have the sale showing on Schedule D, and then they also had the information was included in their W-2 from the exercise of a non-qualified stock option. So they were double reporting their tax. Well, anyway, so sometimes there are issues that, it's a good idea to get help anyway.
Right.
But nonetheless, when you get these notices, yes, one, don't stick it in a drawer and forget about it.
Right. No, you're getting it for a reason.
Yeah,
There's something that either there's a document that the service has that they believe should be on your report on your return, and it's not there, and that's might be one of the causes for the letter coming from the service.
Right. And so anyway, but some people, they get maybe a little careless about some correspondence, I guess is what we're saying,
Right.
And because it's an unusual item from the IRS, again, they may sort of put it in a certain place, and I'll get to it later, and then later doesn't seem to come around in time, and the next thing you know, you've got a problem. Okay, well, why me? Well, why do people get these notices? Or are you going to know? Or
you probably won't know, but generally the reason why an audit results is because there's something that draws attention on the tax return, maybe a large expenditure that perhaps would need some investigation. The IRS also has a program called the National Research Program, which is a formula that determines somehow that a return doesn't fit within the parameters, and therefore it possibly would be a return that should be examined. And the final thing, I guess, or not the final thing, but another item is there are certain hot button issues. And my experience recently is that the IRS is pursuing issues where taxpayers are claimed to be real estate professionals. And,
okay,
and a real estate professional issue, in general terms, is a situation where your rental losses on your rental schedule far exceed the passive loss limits, which are $25,000. And instead of being held to that limit, if you qualify as a real estate professional, if you had losses of $100,000, then they're fully deductible, assuming you qualify. But the problem with qualifying is it seems to be very stringent, and that seems to be a frequent type of audit that occurs.
Yeah. So I think that there's like a whole section or program that's going on related to this real estate professional. We've been seeing a series of cases that have been coming through the courts on this. Taxpayers have been losing fairly regularly. Basically, if you have a full-time job, and if you're claiming to be a real estate professional, as far as the IRS is concerned, it ain't going to work. And frankly, the courts have been pretty much saying the same thing.
Well, that's a good point that you're making, because there are a tremendous amount of cases that are coming through where the IRS is prevailing. But this gets back to even the original question on when you get a letter from the IRS or anything, is to really have your case loaded and documented with all the things that are needed to qualify for whatever the issue happens to be. Because I'm finding that in some cases, if the taxpayer had been logging in diaries or in some sort of day calendar type thing, activities that would substantiate the time requirements, then they're going to be in reasonably good shape. But most of the cases that are failing when they get to the tax courts, as far as the taxpayers are concerned, is because the documentation of the taxpayer isn't considered to be a reasonable documentation.
Yeah. Well, there's some documentation, but I've seen some people that have produced documentation, And again, they were working a full-time job, and they were saying basically, oh, I'm working more hours than that on my real estate professional work. And the judge basically says, you know, this looks really interesting, but frankly, I just don't believe you.
Yes.
And so, so that's what's going on.
There's only so many hours in a year. So
Okay. So I guess I will mention another issue, like you said, it's any unusual item, but like if you have a Schedule C, like a trade or business, you're reporting on your tax return, and year after year you're reporting losses from that, I'd say there's a good chance that's going to attract some attention.
that's correct. Also,
Okay.
they have an issue that, for example, if you're in some sort of activity like horse racing activities, that could
hobby type.
could be a hobby loss,
Yes.
and those losses will be denied as deductions.
Okay. So I think we better move on, or we won't get through much of our stuff here. So how does an individual decide if they should handle an audit themselves or get some help?
Well, it's been my practice that I get referrals from CPAs or attorneys, particularly in the Santa Clara Valley. So if you have a CPA assisting you and they realize, hey, this is not going to be resolved at the agent level, then that's usually when I'm called in. For the individual that is self-prepared a return, if he contacts a CPA and the CPA is able to assist at the audit, then that should be fine. But that's generally, it's sort of a feel thing that you have to know what you don't know is really what it boils down to. And when you feel like, hey, I'm over my head on this thing and I really shouldn't be doing or saying anything more on it.
Okay. So one thing I guess that we'll mention is that an awful lot of the audits these days, they're technically an audit, but they don't feel like an audit. It's, I guess, what we call a correspondence audit. Mm-hmm. So the IRS is basically writing to you and they're asking a question related to something that they're looking for that doesn't seem to match on your tax return. Mm-hmm. And so they're looking for an explanation, a little bit like the thing that we were talking about before, that they sold some stock, the stock was not reported on Schedule D, and the income was in fact reported on the W-2 form. So anyway, so an awful lot of the stuff starts initially from that type. Some of them can be actually pretty big issues.
Yeah. Oh, this one turned out to be an unbelievable issue because it went from collection due process to audit reconsideration. I mean, it was just blown entirely out of proportion. But if you recounted that circumstance to some professional, they say, mm-hmm. "Oh, that should have been resolved easily."
Yeah, but it seems like
it didn't happen.
Yeah. So another thing is that, so like I said, then when you get to the situation where I guess you could say nose to nose to toes with an IRS agent, at that point it's probably a good idea to get some representation, don't you think?
Oh yes, because you can be going along with an audit, and you'll realize there's a point at which you're at an impasse where discussions and presentation of documents aren't going to be persuasive, and so at that point it's probably a good idea to say, all right, if you're the taxpayer or the taxpayer with a practitioner, that maybe we should have somebody else get involved in this to see whether it's a workable thing to go to the appeals section of the IRS.
Mm-hmm. And definitely, if you ever get to appeals, as we'll talk about later, that's not a place for taxpayers to be. So anyway, part of what I'm getting at too, though, is to be aware of what your rights are. Now, and there's some cases even where it's a good idea to get an attorney involved. I had one of these, this was years ago, but basically we had some difficulty, I had some difficulty working with the IRS. They wanted to do, it's one of those cash audits, where the $10,000
Right.
reporting. And they wanted to, it was for an auto dealership, they wanted to go out to the dealership, and the dealer said, no, I want them to do this at your office. And so we had some going back and forth related to this, and they started, saying some nasty things to me, mm-hmm. Like, well, you're not being cooperative or what have you. And I said, well, I guess it's time for me to call in, my big gun. So then, I called a tax attorney friend of mine, and he says, it's clear here that the taxpayer's rights is to have it done at the representative's office, and then, then we had the interview with the attorney present with the client. And he said, I don't think you need to answer that one, and so forth. So it sort of brought the level down
Right.
for, if you will, the stress level, and then more cooperation on both sides, and we could work through the issues.
Right.
So, and it ended up being a clean examination, fortunately. Okay. Well, some people think that if they bring a representative, that the IRS might think that they have something to hide. Maybe you could talk a little bit about that.
No, I don't think that's the case at all. In these times, it's almost a given that there will be a representative in an examination, and he will execute what is called a power of attorney with the client, which allows him to speak to the IRS on the client's behalf, and also to receive all the correspondence that will be coming through from the service on the issue. So I would say that's almost commonplace on any case that I've been involved in, where the
You're there.
yeah, well, the representative, if I'm called in and there's already been a representative,
Yeah.
he has a power of attorney.
I see.
And he's been dealing with the matter, and then when I'm called in, then we execute new powers and go from there. But it's such a common thing that that's not looked upon, I don't think, with any color at all. It's just a matter of fact thing.
Okay. Who's qualified to represent a taxpayer before the IRS?
Well, you got enrolled agents, CPAs, attorneys, actuaries, and at the agent level, you can even have a registered preparer who'll be able to do that. So that's pretty much it. Of course, the taxpayer again can also represent himself if he wants to really be in a wild position. But I would recommend strongly against that.
What do you think that the representative contributes to the process?
Well, sometimes if you're talking about technical jargon and that type of thing, where the client isn't fully aware of code sections and this type of thing, but just knows the general business aspect of things, that's where things can be brought to, I guess, a mutuality through communication, that type of thing. So
Yeah. So basically, the representative speaks the same language as the IRS agent,
Right.
and so then they're able to communicate more effectively related to the issues and get through. Sometimes you can even have problems there, but still, because we have a similar background or education, that really helps.
Right. For example, if the agent is talking about an item under Section 162 of the Internal Revenue Code to the average person, that means nothing at all, but that has some significance in the discussions when talking to a representative.
So let's say you started an audit with yourself, or maybe even with a tax return preparer helping out. At what point should you seek additional help?
Well, usually when you've come to a point where, hey, we're getting nowhere. We keep going back and forth on the same issues. I have a case recently where the agent was convinced that there was the service's position was prevailing, and when I pressed on it, the agent responded, "Well, we have a tax matters expert in our office that says this is the way it should be." And I said, "Fine, then may I speak with him?" "No, you can't speak with him." "Then fine, then that's about as far as we can go on this. We've exhausted it." So that's when we go forward to the next level. Now, as far as getting additional help, I can go all the way to tax court. So in that instance, it's not that big a thing to me. But if you're a tax preparer or CPA and you don't get involved in things going beyond the agent level, then you want to call somebody in, an attorney or another CPA or someone such as myself to take the thing to appeals.
Okay. Are there items requested by the IRS that taxpayers aren't required to provide?
Well, I'm not that cloak and dagger. I usually, hey, the truth will out, so whatever they need in the way of cooperation, then provide it. So, again, if you're talking about something that gets beyond the scope of a civil matter, then obviously that's going to be out of my purview, and you want to get someone in who's got some background in audits where there is some criminal aspects to it, but usually you know well in advance if that's going to be the case, because you will have not only an agent present but a special agent assisting him. So whenever you have two parties there at the audit, then that's time to call a halt and say, hey, we need some additional assistance.
Okay. So what Bill has just said is, let's say that you're suspected of tax fraud or some other criminal matter, then usually there will be a special agent that's involved. It's a different type of IRS agent. Somebody said they're the ones with the gold badges instead of the silver badges. Well, they're the ones who can carry guns. Well, anyway, but nonetheless, when you have that type of a situation, the regular CPA and the taxpayer basically should shut up, and and they need to get an attorney that specializes in that type of work to represent them, because this is very serious, and you may be involved with the Fifth Amendment rights and other things that you need to be very careful about how this is handled. So so just be alert for that, but that's not really the intention of this program to talk about that, but nonetheless, some tax audits do look a little bit like that, and when things look very aggressive in the front end, then again, be alert, and that means it's time to be sure that basically you're talking to your representative who specializes in that type of work. Okay, let's say you get an IRS notice and it says a date and location, but that's just not going to work for you. What do you do?
Well, you can call, and that's usually a thing that's easily rearranged to get something that's a little more convenient for both parties. So it's not a hard and fast thing that you absolutely have to observe that day or that even that location, depending upon what the circumstances are.
Mm-hmm. Okay. All right. So let's say that an audit's completed, and so maybe we just talk about the basic process from here, and then in a separate program we're going to talk about appeals and so forth. But maybe you can just sort of talk about what it looks like, and especially like if you're agreed, or maybe even the basics of disagreed.
Well, if you're agreed case, the IRS will present you with a Form 870, which is a waiver that essentially agrees to the findings, and then you don't have to pay the additional tax at that time. You can if you wish, because the agent sometimes will solicit that, but more often than not, they'll take that, and then you'll be billed from the IRS at maybe 30, 45, 60 days from the time the agent finally gets the thing processed and submitted.
Yeah. So I've seen different things at conclusions of audits. So on some, like office visits, the agent actually generates the report.
Right.
And then it can more or less be signed on the spot, and you can conclude. But in many other cases, maybe most other cases, what happens is that the agent puts together a report. They may send you the preliminary report, for some feedback, but then it has to go to their manager, where it sits somewhere for months.
Right. Yeah.
While you wait for some sort of a final report to come through that you can sign. And sometimes these audits can be very frustrating, just because they can just drag on and on and on.
Oh, for sure. Yes.
Yeah.
Yeah.
And to try to get to a conclusion. So whenever I'm handling an examination, I mean, one of my goals, although some people feel that it's to the taxpayer's advantage to delay, but in my case, to me, time is money.
Right.
I mean, my time is certainly money for the client. And so I'm trying to get things to a conclusion as quickly as I can, especially if I feel that this is something that we should be able to agree on.
That's correct.
And so So that's sort of the way that I operate. Maybe you could talk about
No,
that.
that's a good policy. The more that you can show cooperation in getting all the documents that are being requested by the agent, when you get down to those gray areas in the issues, then that can work to your advantage. For example, if the agent sees things that you've hit the mark here, you've hit the mark here, and you've hit the mark here, but we're still not totally sure about the last item, they'll say, hey, this is a pretty good taxpayer, we'll just move on, and that works to your benefit in that fashion. But I'm just giving my opinion on that. It's not necessarily the case in every instance, but I think getting things done in a timely fashion is much better than trying to drag it out.
Have you had much luck when you're concluding an audit, if you have, like a disagreed issue, and maybe you think, I'm dealing a little bit with the fruitcake here, of asking to talk to the manager, and
that's something that used to be very fruitful in the past, but lately I'm finding that the group managers or supervisors are more concerned with procedural matters than technical matters. And if the agent has observed all the procedures, they usually, in my experience, don't seem to want to overrule an agent or to reconsider a technical issue. Now, back in the dark ages when I was a revenue agent, the group managers were very much involved in the technical issues, and so they would see if they could try and smooth the waters and settle a case without having to go further.
Yeah. I had a case recently, and it was the group manager that was coming up with a handling, in this case related to a business interest deduction because it was paid by a home mortgage, that we had a disagreement about. And frankly, again, in this particular case, I was trying to get this matter concluded for this client, and it wasn't going to make that much difference related to the tax. So I said, okay, we're just going to finish this, and that's the end of it. We'll just do this thing. But that happens sometimes. Okay, well, folks, believe it or not, this has flown by. Bill, I want to thank you so much for joining me as my guest again. Your wealth of knowledge in this particular area and experience, that's part of the reason why you're here. Folks, I hope we've given you some appreciation for this process, the IRS tax audits, and hopefully we've persuaded you that maybe it is a good idea to get some help. We'll see you next time on Financial Insider Weekly.